Hello everyone, welcome to OptionGig. This is your host Vivek, part-time option trader and full-time worker, husband and father. If you also want to generate consistent monthly income trading options while working in your regular day job, then join me in this journey. Hello everyone, thank you for tuning into OptionGig. And in this session, I will present you the summary for the week from 10th of February 2020 to 14th of February 2020. If you are new to OptionGig weekly updates, just want to set the context that to begin with, we will talk about market headlines and then we will see how the major market indices have been doing. We'll also talk about a option trading strategy topic, and then we will jump into some of the trades that teach us about option trading. So let's begin. First, the market headlines. Last week, Mr. Jerome Powell, the Fed chairman, had a testimony before Congress, and he mentioned that it is too early to judge the full impact of coronavirus on the US economy. But if the impact is more than what they were expecting, Fed is ready to take all measures to help US economy. In my opinion, all measures mean in hush voice, I'm gonna pump in money. And we have seen this for past few months that Fed has been pumping in money in the repo markets. So let's see how the next few weeks go, but options are open. Fed seems to be ready to inject liquidity or to help the market if required. Next, I might sound like a broken record because the markets edged higher and they have broken the record. After the Fed chairman's testimony, markets went into dizzying heights. All the major market indices, they gained and set a new record high. This is the same story that we have seen week over week. So I apologize if I sound like a broken record, but literally it is. Markets have been breaking all the past records. Next, oil is under pressure. International Energy Agency, they indicated that the global demand for oil is expected to fall in the first quarter of 2020. If their forecast indeed come true, this will be the first quarterly drop in the demand of oil in more than a decade. So that could put oil prices under some pressure. Again, things could change next week. We don't know what OPEC might do if they cut their production or if suddenly the impact of coronavirus is mitigated, we find some cure for it. That will be a good sign for industrial activity and the things could change. Last market headlines. Because of the coronavirus fear throughout the world, a lot of foreign investors moved towards safe haven, which is US Treasury Bonds. So 30-year Treasury yield was at a record low of 2.06% because the bond prices rose. Bond prices and the yields are inversely related. So if bond prices rise, yields drop. And because a lot of investors were moving towards safe instruments like bonds and gold, that had put some pressure on the yields. All right, so those were all the major market headlines. Now let's see how the major indices do. Let's first start with the broad market index SPY. So ETF SPY based on S&P 500 index, it jumped last week 1.89%. It opened at 331.23 and closed at 337.60. Dow Jones Industrial Average Index, a combination of 30 companies, the ETF DIA Diamonds, it opened at 290.20 and closed at 294.54, a change of 4.34 or 1.47%. Technology sector, QQQ ETF based on Nasdaq index, that demonstrated the biggest gains of all the major market indices. It opened at 228.43 and closed at 234.64, a gain of 2.65% or 6.21. Lastly, small business IWM opened at 164.56 and closed at 167.90, a gain of 3.34 or 1.99%. So all the major market indices gained in the last week, and most of them broke the new records for all-time highs. Okay, moving on. How did we do? So last week we closed total 25 trades because we are getting closer to February expiration. My focus was to close as many trades of February as possible, and also the trades that have hit our profit targets, even if they are for March expiration. So out of 25 trades that we closed 23 profitable trades, and 2 of them were the losing trades. That gives us a win ratio of 92%. I wish every week would be like this. All right, and we opened 24 new trades last week. Now, before we get into the individual trades, let's talk about what's the thought of the week. And this thought of the week is inspired by the discussion that I had with some new option traders and questions that they posed me. Their question was, hey, we have a limited amount of capital. How do we get started in option trading? It seems so overwhelming. How do we dip our toes? So my answer to that is, take your first baby step. There are option trading strategies in which you can limit your losses. You know what your maximum loss could be. So use those option trading strategies to start dipping your toes in options. Take the first baby step. When you're climbing a mountain, the most important step is the first step that you take. Same is the case with option trading. You're not gonna be profitable in long term on option trading if you're just gonna sit on the sidelines and wait for the perfect opportunity that may arise. It's never gonna happen. So take a first step, figure out what option trading strategies you want to use, and to cut through all the noise, I also talked about 3 option trading strategies that you can use. I will briefly mention those here. If you want to get the details of those 3 option trading strategies, head on to my podcast and listen to episode number 26. So quickly, 3 option trading strategies that I suggest to a newbie trader that they can use to dip their toes in option trading without losing sleep are: first is a bullish option trading strategy. So if you are bullish about a particular stock, you should sell a put spread on the stock. When you sell a put spread, you already know what's the maximum amount of money that you can lose. So considering your account size, you can draft a trade that you are comfortable with. Second trade strategy is for a bearish outlook. If you are bearish on a particular stock, you should sell a call spread. Again, when you sell a spread, you have already defined what your maximum loss would be. So you know at the trade entry how much you could lose. You're not going to lose anything more than that, irrespective of where the share price might end up. Third strategy is if you have no directional bias on the stock. Yes, that's the beauty of option trading. You don't always have to have a directional bias on the stock. So if your outlook is that the stock would stay range bound for the next 30 to 45 days, say 10% or 15% up or down, you could sell an iron condor by selling a put spread 10% below and a call spread 10% higher from the current price. So as long as the stock stays between the 10% up and down range, you make your money. And because it is an iron condor, it is a defined risk trade. So you don't have to lose your sleep on what's happening to your trades because the risk is already defined. You cannot lose more money than what you had initially predicted when you opened the trade. For more details, hop on over to the podcast and listen to episode number 26. All right, now this is the time to get into the individual trades. As always, I will pick up only top 3 trades to review in this summary. If you want to know all the trades that I have executed, hop on over to my website www.optiongig.com and go to the trades page. I post my trades within 7 days of the execution, so you can see all the trades over there. You can find a lot more content on option trading education on that website and also on my YouTube channel OptionGig. So don't forget to subscribe to it so you can be notified of the latest episodes whenever I post it. All right, let's jump onto the trades. First, we talk about the profitable trades. So first one I want to talk about today was a custom trade that we had opened on Luckin Coffee, ticker symbol L as a lamb and K as a king, LK. On 4th of February, we had opened a short put and a call spread. So I had sold 2 short puts at a strike price of 35 and also sold a call spread at strike price of 47 and 50 and collected a whopping $10.63 premium. I was bullish on Luckin Coffee and that's why I did the trade. If stock does not cooperate and goes down, I would have ended up owning the stock at $29.70, which was 15% discount. I love discounts. That's why I do these trades. And I was okay to buy the share at the discount. But if the stock cooperates and stay higher than 35, I would have retained the premium. Within 10 days, stock actually rose to $38 and it hit our profit target. So I closed the trade and eventually the return on capital was 12% within 10 days. So when I closed the trade, the stock was as $38.04 and I closed it for $5.61 with a net profit of $502 in this trade. Next trade I want to talk about is the short put that we had opened in Slack Technologies, ticker symbol WORK, work. I have been bullish on this company for quite long and I've been selling short puts on this. So pretty standard trade. The stock was at $23.01. So I sold an at the money put at a strike price of $23. We sold 4 contracts, collected $1.95 as a premium. Within 9 days, the stock rose to $26.27 and the trade hit our profit target, and I was able to close the trade. I was able to buy back the put at 85 cents. Overall, in this trade, we made decent $440 and it was 17% return on capital within 9 days. Last trade I want to talk about today is the Iron Condor in Mercado Libre, ticker symbol MELI. So I had opened a wide Iron Condor in Mercado Libre on 9th of January. I've been little bullish on this particular ticker. So when the stock was at $645, I opened an Iron Condor with short strikes at 620 and 710. It was a $10 wide Iron Condor, means my long put was 610 and the long call was 720. Overall, we collected $5.86 on this trade. We did just one contract. Now on 11th, just after the earnings, the volatility was crushed and it almost hit our profit target. Now I have been bullish on this and I was thinking to just keep the trade on for 20 till 21st February, let it go all the way to expiration so that I can squeeze out the last remaining premium on it. But I think sanity prevailed in my head, and realizing the fact that I talk about multiple times is that the gamma risk in the last 2 weeks is really high, and I thought it is best to close the trade, take the profits, and if still bullish, put a trade with a longer dates to expiration. So finally on 11th of February, I closed it for $2.33 and netting the overall profit of $353. The return on capital was 35% within 33 days in trade. And lo and behold, if you really look what happened to Mercado Libre, after I closed the trade, for the next few days, it kept on going up. And if I had not closed this trade, right now, I would have been nursing losses on this one. The stock today is 730 plus. So it would have breached our call spread. That is why it is very, very, very important to just trade by the system. When your stock hits the profit target, take it off. And I'm glad I did that. I did not make the foolish mistake of holding this trade all the way through expiration. That's a lesson learned. With this, we have finished top 3 profitable trades. Now let's move on to the next section in which we talk about top 3 losing trades. So first trade I want to talk about is the Baidu. I had rolled down my short call in Baidu, ticker symbol BIDU, from 145 to 140. And when I rolled this down, I had collected $1.38 as a premium. This was a trade as a hedge against my $130 short put. So when I closed my $130 short put and $140 strangle, I lost money on the call side because the call said I had to close at $1.76. I had initially taken a premium of $1.38, closed it at $1.76, means loss of $38. But I'm okay with this loss because the overall strangle, I made money in the overall strangle. So it was a no-brainer for me to go ahead and close this trade even though I lost money on this individual trade. Similar is the case on Etsy, ticker symbol ETSY. We had a call on Etsy, the short strike of 52, which was a hedge trade against a short put at 50. On this trade, we lost overall $9. When we opened the trade, we collected a premium of 82 cents, and when we closed the trade, we had to close it at 91 cents. Hence, the loss of $9. When we opened this trade, Etsy was trading at $48.85, means it was below our short put. So as always, we created a trade on an unchallenged side by adding a short call at 52. After that, Etsy started to rise, and when it was right in the middle of our short strikes, when it was at $51.05, we closed the overall strangle. So I lost money on the call side, but I made more than enough to compensate for the loss on the put side. So overall, we were able to close the strangle at a profit, even though we lost money in this individual option trade. So I would do this trade any time of the day, even if I lose an individual leg. As long as I have made money in the overall trade, I am good with it. All right, moving on to the next one. Let's talk about the top 3 option trades by premium that we opened last week. The first one is we sold 2 iron fly in the biotech ETF XBI, and the fly was centered at 97, and we went far away to buy the cheap wings, almost $12 out. Overall premium that we collected was $5.65. We did 2 contracts. We opened the trade on 13th of February, so collected a total premium of $1,130. When we did the trade, the stock was trading at 96.97, so right close to our short strikes. Now, this is a ladder trade. We already have an iron fly on XBI, which is centered at 93. So now we opened up another one centered at 97 because XBI had moved a lot since we opened our first trade. So I wanted to widen my break even, and adding another position would not have violated my position sizing rule. My portfolio is well suited to handle one more position on XBI, so it was a no-brainer for me to add a ladder trade and widen the break even on the call side. Next trade I want to talk about is we sold a put on Slack Technologies. Like I mentioned earlier, I had closed the March expiration short put trade on Slack Technologies for profit, but I continue to maintain a bullish outlook on this. So I opened up another short put, this time the nearest out the money strike. So the stock was trading at $26.21. So I went ahead and sold a put at $25 strike price. We sold 4 contracts of it, and we collected $2.04 per contract. Overall, collected $816 as a premium. My game plan is that I will close this trade once it hits our profit target. Last trade, we sold a short put on a company called Medallia, ticker symbol MDLA. Same story like Slack. I have been bullish on this one, and earlier I had a trade for February expiration, which I closed at a profit, and continuing my bullish stance, I opened up another short put. The stock was trading at $29.40. So I open and closest at the money short put at a strike price of $30. We did a 2 contract and I collected $3 as a premium. If stock does not cooperate, means if it goes down, I will own the stock at $30 strike price, but I already collected $3 as a premium, means I will be owning the stock at 10% discount because my cost basis will be 27. So if I like it today at 29.40, I would love it at 27. Again, our exit strategy would be if the trade make closer to 50 to 60% of the max profit, I will exit this trade and maybe put another trade if I have the same bullish outlook on the stock. This brings us to the end of the weekly summary. As always, if you have any questions, ask it in the comment section or you can email me at optiongig@gmail.com. I hope this was useful for you. Do let me know if there are any other topics that you want me to cover on option education, and I will be happy to bring those topics in front of you. Thank you. Have a wonderful day. Bye-bye. Please note that all the information presented is purely for educational purposes and is not a financial or investment advice. I don't know you, you don't know me, so do yourself a favor and don't invest or trade solely based on what you hear.